In today's video, I'm going to be sharing with you my spike catching strategy. I know you guys have been waiting for this strategy. Some persons have um, personally requested for this strategy, and in today's video, I'm going to make sure that I walk you through a simple but effective concept that you can use to scalp, that you can use to catch spike on Booma and Crash. Okay, I'm not only going to be sharing with you a simple concept that you're going to be using to catch spike, because most times you learn a strategy but they don't tell you when to exit in profit. You can be in that trade and you can be in profit, but the strategy you learn might not teach you where to exit that trade in profit. But in today's video, I'm going to be closing that gap. I'm going to be teaching you how to catch spike, where to exit in profit, and in case that particular trade does not go in your direction, which I don't think is possible if you follow every single thing I'm going to be teaching you here, you might not really encounter those kind of scenario. But in a situation whereby you encounter a scenario whereby the trade does not go in your direction, I'll also be sharing with you all the method and all the concept you need to know to take trades, where to take profits, where to exit that trade in profit. And also, for those of you that will be watching this video to the very end, I'm also going to be sharing with you one other bonus tips to help you trade and catch spike in Boom and Crash effectively. This particular trade, um it was only after two candles, after two candles the market spiked. After two candles the market spiked. So this strategy is a very is almost accurate. Okay, but I'm also going to be sharing with you, just in case you enter any particular trade and the trade does not spike immediately, I'm going to be showing you what to do. And also, when you take a trade and the trade spikes, I'm also going to be sharing with you what to do. And towards the end of this video, I'm going to be sharing with you a bonus tips that can help you stay consistently profitable catching spike, okay, on Boom and Crash. Okay, and with this strategy you can easily grow your account. You can easily grow a small account or a big account. All right, so now let's head to the strategy. So you go to the F icon, and these are the two indicators that we're going to be using for this strategy: the commodity channel index and the moving average. So let me just delete everything so we can do everything together, and we are in the same chart. Now um now you go to your indicator windows, you look for your commodity index, your commodity channel index. Okay, so in your commodity channel index, your parameter, your period is 14, applied to typical price HLC3. Okay, in your style just use 2 pixel and use this color. Okay, then you click done. Now we have the commodity index window in our chart. The second indicator that we're going to be using for this strategy is our moving average. Okay, and I want you to take note, in the moving average you have to apply the moving average to your indicator window 1. Okay, make sure you apply the moving average to your indicator window 1. All right, so you look for your moving average, and in your moving average, these are your parameters. Your period is 8, the shift is 0, the method is simple, then apply to close. Okay, apply to close. Then your style is 2 pixel, use color black in your color. Okay, then you click done. So these are the two indicators that we're going to be using for this strategy. These are the two indicators that we're going to be using for this strategy. Now guys, this strategy is a very simple but yet powerful strategy. Okay, make sure you watch this video to the very end so you don't miss any important information in this strategy. How do you now catch spike using this strategy? I'm going to be explaining to you how to use these indicators here. I'm going to be explaining to you how to use indicator here. But before you start looking at this indicator for trading signals, before you start looking at this indicator for confluence and for trading signals, make sure you have gone to the higher time frame. Okay, higher time frames such as the daily time frame, okay, and 4 hours time frame, the 1 hour time frame, and the 5-minute time frame. Okay, you going to all these lower time frames, it will help you try to figure out and try to understand the direction of the market. That's the very first thing you have to do before you now start looking at the commodity channel index. Okay, so after you've gone to the higher time frames such as the daily time frame, the 4 hours, the 1 hour, 50 minutes and 30 minutes, once you've gone to those time frames and you've looked at what the market is doing in those time frames, then you can now step down to your 1 minute time frame and now start looking at the commodity channel index. Now in this commodity channel index, you have to wait for trading opportunities. The reason why there are so many market is stocked in this top price here is because this market is almost in a bullish trend. Okay, the market is always in a bullish trend, but there's always going to be a way. If you use this strategy effectively, there's always going to be a way for you to find trade every single day, even if the market is in a bullish trend or the bearish trend. If you use this strategy the same way I'm going to be teaching you, you are going to make profits consistently every single day using this strategy. So after checking the higher time frames, then you now come to your commodity index. Now in your commodity index, you have to wait for price to go below. You have to wait for price to go below the -100 zone. Okay, price has to come below -100 zone. So -100 zone is a safe zone for you to now start looking for opportunity to catch spikes. Okay, that's on boom 1000, boom 500 and boom 300. The market has to be below the -100 zone for you to now start looking for opportunities, and it is better when the market is below the 100 zone and it is close to -200, -202.01 zone. Okay, so when the market is in these particular zones, those are the zones that we start looking for opportunities to catch spike. And you see that when this small spike occurred here, I did not try to buy this trade, I did not try to enter this trade. I had to wait for the market to resume, for the market to get to this -0.2 level before I now bought the market. And as I bought the market immediately spiked. So in this trade, where do you now take profits and where do you use as your stop loss zones? Where do you take profit and where do you look out for as your stop loss zone? Now this commodity channel index is the first place that you're going to be looking out for whenever you take trades. And as you can see, the commodity channel index is always forming different kind of highs and different kind of lows. Okay, there's a high here, there's another high here, there's another high here. Okay, but whenever you take a trade and there's a very long spike, as you can see this spike here, it took more than 15 candles. This spike here gave us more than 15 candles. This strategy is more effective than even some scalping strategy that you're using to just catch 1 minute candles, because in a very short time, in 2 minutes, in 3 minutes, a spike can happen, bam, and you're in deep profit. So even if you take a trade from -100 or -200 zone and the market spikes upward, coming close to this 318, zone, that's where you can take profit. Or you now look at the indicators window, look at these zones, these previous zones. This spike that happened here, it cleared out all these highs, indicating that the spike is a high or is a long spike. So whenever you catch long spike like this, I will advise you not to be greedy. Take your profit and leave the market. Whenever you catch long spikes like this, don't be greedy. Take your profits and exit the market. Then wait for another opportunities. Wait for another opportunity for you to now start looking for buy or selling opportunities. That's catching spike. Okay, now where would be your stop loss zone? Where would be your stop loss zone? Now whenever you take trades, okay, whenever you take trades and the market is below -100, market is below -100 and -200 zone, okay, whenever you take trades and the market gives you 10 candles, the market give you 10 candles without going in your direction, I will advise you to exit that trading loss. Okay, just close that trading loss and look for another trading opportunity. Now, another thing I do that makes me really profitable, that also helps me catch, also gives me multiple, that also makes me catch, also makes me have more profit when trading this market, is that whenever I try to buy a market from a particular zone and it keeps going downwards, if the market goes downward and gives me 6 candle in loss, minus 6 candle in loss, I will add another position. Okay, I will add another position and wait for 10 candles. Okay, and most times, because I've already waited for all the confluences, I've looked at the higher time frame, I've looked at the higher time frame price action, and I've looked at my commodity channel index. Okay, and the market is below minus 100 and minus 200. Most times the market does not get to 10 candles before spiking in my direction, so I might have like 2 positions, because the first position I entered, I had to wait. It was, when it was in minus 6 candles, it went 6 candles against me in loss before I now added one more position. So in total I have 2 trading position, and I'm waiting for the market to go minus 10 candles. Okay, but before that 10 candles, the market has already spiked in my direction. And remember, I'm having 2 positions, and that 2 positions will be in massive profit, giving me more profit. But guys, you have to trade this strategy with so much discipline. As soon as the market gets to 10 candles, as soon as the market is in 10 candles loss, as soon as you have 10 candle loss, exit that trade. Okay, exit that trade. But most times, because of how accurate and how accurate and how you've looked at all the indicators, and you look at all the indicators to give you high confidence, before the market gets to this minus 10 candles, it will always spike in your direction, giving you profit. So guys, if you're trading a big account like $100 account, or your account such as $50 account, you can open 2 positions. Okay, you can open 2 positions and wait for the spike to happen. Okay, and as soon as the spike happens, if it's a long candle, it's a candle that spike up to 15, if the market spike and the spike was up to 15 candles, just exit that trade in profit and wait for the next trading opportunity. Okay, exit that trade in profit and wait for the next trading opportunity. For those of you who do not have big accounts, I will advise you to use a very small lot size, such as minus 0.10 lot size. Now, the minimum lot size in Boom and Crash is minus 0.20. Okay, the minimum lot size in Boom and Crash is minus 0.20. Okay, but you can always reduce the lot size from minus 0.20 to minus 0.10. This way, you have split your risk into 2. Okay, now when you open one position with minus 0.10, okay, and the market goes 6 pips or 6 candle against you, and the market goes 6 candle against you, you can now add one more position with now minus 0.20. So the total number of lot size you have floating in that trade will now be minus 0.30. This is a very good way for you to conserve capital. Okay, for you to conserve capital, because your stop loss level in this particular trade is 10 candles. Okay, we have to work with 10 candles. Guys, you have to be disciplined while trading. Any trader who is not disciplined will not stay in the market for a long run, because it does not matter what you see, as long as the market goes 10 candles against you, exit that trade in candle. Okay, exit that trade in loss. Now, if you now have minus 0.30 lot size, and the market spikes in your direction, giving you 10 to 15 candles, exit that trade in profit. Exit that trade in profit. So just keep on repeating this process every single day with discipline and patience. Wait for the market to come to your trading zone. Guys, the downside about this strategy, the downside about catching spike is that if you don't wait for all your confluence to meet up before taking trades, you might take trade in the wrong zone. Imagine you taking Imagine you buying this market now. Imagine you buying this market from here. Imagine you buying this market from here. Can you say that by the time the market got to this zone, it has already given you 10 candles? You're already in 10 candles loss, and you have to close in loss. And you see, immediately you close in loss, the market spike. Even though you bought from here and the market spike, can you see that the profit that you're going to get will be very, very little? But because of the second position you're going to add here, it will now help you be in overall profit. So guys, this is just a simple way for you to trade and card spike using crash and boom. Thank you for watching this video to the very end. Don't forget to like this video, don't forget to subscribe to my YouTube channel, and also turn on the notification bell. Don't also forget to share this video with your friends and loved ones on every other social media platform. Thank you for watching this video. See you in the next video. God bless you.